Let me ask you a question that probably keeps you up at night. You've backtested your strategy. It has a positive edge. You've taken the courses, you know your indicators inside and out. You put in the screen time. So why, when you go live, does it all fall apart? Why does that perfect setup you took turn into a loss the second you enter? Why do you watch in horror as price reverses right at your stop loss, only to rocket in your original direction? It feels personal, doesn't it? It feels like the market has your number. Here's the uncomfortable truth I've learned from working with hundreds of traders. The problem is almost never the strategy. Not really. The blueprint is fine. The problem is the builder. The problem is the ghost in the machine, the silent, subconscious script running in the back of your mind that overwrites your every logical decision with panic, greed, and fear. Today, we're going to name that ghost. We're going to drag it into the light. We're going to talk about the poverty mindset versus the trader's mindset. This isn't about how much money you have in your account. This is about the psychological fabric you're made of when you sit down to trade. It's a subtle difference in thinking, but I'm telling you, it's the difference between a slow, grinding decay of your capital and your confidence and building genuine, sustainable wealth from the markets. By the end of this, you're going to have a mirror held up. You're going to recognize thoughts you didn't even know you were thinking. And more importantly, you're going to have a concrete path out. Let's get crystal clear on terms. When I say poverty mindset, I am not talking about your net worth. Some of the most poverty-minded traders I've met have six-figure accounts. And some of the most abundant, trader-minded individuals are trading small. I'm talking about a mindset of scarcity, a deep-seated belief that there's not enough opportunity, not enough money, not enough luck for you. This scarcity infects your trading like a virus, and it manifests in three deadly symptoms. First, the obsession with money over process. For the trader infected with scarcity, every tick is a dollar sign. They don't see a support level. They see the price where I'll make $287. They don't see a stop loss. They see the point where I lose my weekly grocery money. The trade isn't a probabilistic scenario. It's a lifeline. This creates unbearable, distorting pressure. You can't think straight when you're trading your kid's college fund or your rent. So you do irrational things. You cut a winning trade early because $200 profit feels like a relief, a chance to take something from the market before it's snatched away. You let a loser run because admitting that $100 loss feels like admitting you're a failure who can't provide. The money means too much. Second, the victim mentality. This is the crown jewel of the poverty mindset. The market makers stole my money. My broker is hunting my stops. The algos are manipulated against the little guy. Now, is there institutional flow? Of course. But the victim mentality uses that as a blanket excuse for every personal failure. It's a coping mechanism to avoid the painful, searing accountability of looking at your own chart and saying, I entered here with no confluence because I was bored, or I risked 5% on a whim. The victim gives their power away completely. They are a leaf in the hurricane. This is a profoundly disempowering and hopeless place to trade from. You can't fix the market, but you can fix you. Third, the short-term gambler's desperation. The scarcity mindset cannot conceive of the long game. It's starving now. It needs to be fed now. This is why you revenge trade right after a loss. You need to get it back now. This is why you double your position size after 3 wins. You're on a hot streak and must extract as much as possible now before it vanishes. This mindset treats trading like a series of urgent, life-or-death events, not a calm, statistical profession. It's the mentality of a gambler at the roulette table, not a business owner reviewing quarterly metrics. Now let's breathe, because the trader's mindset is the antidote. It's the opposite of scarcity. It's a mindset of abundance and probability. Not abundance of money necessarily, but abundance of opportunity, time, and self-trust. The first pillar is a fanatical focus on process. The trader's mindset is borderline obsessive about the how, not the how much. Did I wait for my A+ setup with all 3 confluences? Did I place my stop at the technically valid level, not the pain I can stomach level? Did I take profits according to my plan, or did I get greedy? The money is a distant byproduct, a scorekeeper in a game you're playing against your own discipline. A losing trade that followed every rule is, in this mindset, a good trade. It's feedback. It's a data point. It's not a wound. This shift alone removes about 80% of the emotional torture from trading. The second pillar is radical, unflinching accountability. The trader's mindset looks at the market and says, "You are what you are." A massive, chaotic flow of liquidity and sentiment. My job is to navigate you. There are no villains. There's only price action. When a stop is hit, they don't blame a spike or manipulation. They ask, was my stop in the right place? Was my timing off? This is incredibly powerful, because if you are the source of your losses, then you are also the source of your wins. You are not a victim of the market. You are a participant who chooses their actions. This mindset is empowering beyond measure. The third pillar is the long-term, probabilistic view. This is the grand perspective. The trader's mindset understands that a single trade means absolutely nothing. It's meaningless. It's one brushstroke on a massive canvas. The focus is on the edge, that slight statistical advantage your strategy has, playing out over 100, 200, 500 trades. This mindset allows you to take a loss with a shrug. That's trade 47 out of the 100 I'll take this quarter. Next, it allows you to take a win without euphoria. That's my edge playing out. Good. It turns trading from a roller coaster of emotion into a somewhat boring, mechanical execution of a business plan. And boring in trading is beautiful. Let's make this so concrete you can feel it. Imagine the same perfect pin bar rejection at a key daily support level. The technicals are pristine. Both traders see it. Trader A, poverty mindset, his heart rate spikes. He's down $800 this week. This is it. This is the trade that gets him back to even. The thought, "I need this one," drowns out everything else. Because he needs it, he sizes up. 2% risk? No, he needs a result. He risks 5%. He enters. Price ticks in his favor by a few pips. Come on, just 20 more and I'm back in the game. It stalls. It starts to tick back. Anxiety floods his system. No, not again. I can't lose another $500. He sees his hard stop, the one based on the chart, approaching. In a panic, he drags it wider, violating his plan to give it room. The market senses his fear. I swear it does. It runs straight into his new, wider stop. He takes a catastrophic loss, twice what he originally planned. He slams his desk. Rigged. They took my money again. He is now in full victim mode, emotionally hijacked, and likely to revenge trade. Trader B, trader's mindset, he sees the setup. He checks his checklist. 3 confluences? Check. Market context aligned? Check. He calculates his position size, 0.75% of his account, his standard risk. He enters, places his stop at the technically invalid level below the swing low, and sets a take profit at the next resistance. He then stands up and walks away. He makes a coffee. He might even forget he's in the trade. Price could wiggle 10 pips against him and he wouldn't know. He's not attached. It's one of the 20 trades he'll take this month. Either it hits his stop, a small, planned cost of doing business, or it hits his target. His psychology is completely intact. Win or lose, he will review the trade later for process adherence, not P&L. See the difference? The same chart, the same opportunity, 2 different worlds. One is a world of drama, fear, and personal significance. The other is a world of calm, rules, and statistics. Which world do you think is more profitable over time? This isn't about flipping a switch. It's a daily practice of mental hygiene. You have to retrain your brain. Here's how you start. Step 1, the awareness journal. Your trading journal is your greatest weapon. But I want you to add a new column, mindset log. After every trade, before you even look at the P&L, write 1 sentence about your emotional state entering. Was it anxious to recover from yesterday's loss? That's scarcity. Was it bored and wanting action? That's gambler's urge. Just labeling it robs it of its power. You're not a bad trader. You're a trader who noticed a poverty mindset thought. Big difference. Step 2. Trade ridiculously small. I mean it. I want you to trade a size so small that a full stop loss feels like a rounding error. A mosquito bite. If 0.5% risk still makes you sweat, go to 0.1%. The goal here is to decouple the monetary outcome from the emotional reaction. You are surgically removing this scarcity trigger. You need to prove to your nervous system that you can follow a process and be perfectly okay with either outcome. This is non-negotiable foundational work. Step 3. Reframe your internal dialogue. You have an internal narrator. Right now, it's a doom monger. You need to become its editor. When you hear, "I can't afford another loss," you consciously reframe it to, every trade is a cost of gathering data on my edge. When you hear this is my last chance today, reframe it to there are thousands of trading days in my career. This is one setup. Step 4. Ritualize good losses. This feels weird at first. When you take a loss that was perfectly according to plan, I want you to mark it in green in your journal. Say out loud, good trade. Maybe even give yourself a literal gold star. You are reprogramming your reward system. You are teaching your brain that following the process is what gets the reward, not the random outcome of a single trade. This is how you build an ironclad process orientation. So, let's land this plane. The poverty mindset trades from a place of lack and fear. It's desperate, short-sighted, and sees itself as a victim. The trader's mindset trades from a place of abundance and probability. It's patient, process-driven, and sees itself as a responsible professional. Your mindset is the foundation. You can build a beautiful trading house, a great strategy, but if the foundation is cracked with scarcity, the whole thing will eventually collapse under stress. Here's my question for you right now. Which narrative have you been living in? Be brutally, mercifully honest with yourself. Just the act of asking that question is the beginning of the change. If this video resonated, if it exposed a crack in your foundation, then do this for me. Hit that like button. It tells YouTube this is important, that this isn't just another magic indicator video. This is the real work. Subscribe to Losing Trader's Psychology. We go deeper here. We deal with the real, hard, internal stuff that actually determines your destiny as a trader. And most importantly, go down to the comments. I want you to type this one phrase. My biggest scarcity thought is, and just finish it, that I'm running out of time, that I'll never be good enough, that the market owes me. Exposing it publicly, even in a comment, is a powerful act of defiance against it. Let's get it out in the open and support each other. This is the path. It's not the easy one, but it's the only one that leads to consistency. Remember, trade the process, not the payout. Thanks for your time, and I'll see you in the next one.